welcome back, everyone. I hope you had a fabulous lunch. We wanted to figure out who in our audience today cared the most about revenue, and now we know. You're all here. Welcome to session 5.1, and the title of this is Revenue Beyond Rooms, which is a theme that has come up multiple times in the general sessions. So I'm very, very pleased to introduce Stephen Haag, who is going to be our moderator. He is a partner and co-founder of Capax Capital. Please join me in welcoming Stephen to the stage. Thank you very much.
Yeah. Great, and thanks for your enthusiasm for revenue, especially post-lunch. We'll try to keep it light, try to keep it interactive, and really get into your questions as much as possible. So feel free to get into Slido early and often. We're going to get into those questions in a meaningful way. This is my third time, I think, being at Unfold and having a chance to be up on stage. Previous roles at Sonder and then at Cove and Seiko. This is my first time where I've gotten a chance to host a panel discussion. And I'm really, really excited to welcome some panelists to the stage who know a lot more about revenue than I do. At Capax, we find, fund, build, and then bring in operators to operate hospitality assets. So we're very much in a real estate private equity world, more than kind of the operational and revenue people that will be joining me on stage. So I'm here very much to just moderate and listen to their great ideas and answer the questions that you guys have. So with that in mind, we've got our wonderful panel. We'll bring out Hans, Michael, and Jens. Thanks, guys. And for Jens, let's start off with you. A bit of background on you and what you're doing at FLYR.
Yeah, sure. So my name is Jens Munch. I'm the CEO of FLYR Hospitality. And there are two ways of describing what we do. One very quick. So we are effectively, you can call us an RMS or revenue management solution. But I think the slightly longer answer is that we think revenue management has made huge strides in the last 5 to 10 years and is now moving towards more of a revenue strategy or commercial function. So whereas there are a bunch of RMSs, there are actually a surprisingly small number of platforms that can enable real revenue or commercial strategy, and we are one of those.
Great. And Michael, kind of similar space.
Yeah, hi everyone. My name is Michael. I'm the Area Vice President for Ideas. I look after the EMEA region. I've been in hotel technology for 20 plus something years. I'm a failed engineer, so I had to do something different, and I ended up in hotel technology. Ideas, if you don't know, is a leading revenue management solution. We've got 30,000 customers worldwide, servicing from big chains right through to independent hotels.
That's great, thanks. And Hans, coming from a slightly different perspective as an operator of real estate itself.
Hello everybody, my name is Hans Meyer. I'm a co-founder from Zoku. Zoku bridges the gap between hotels, serviced apartments and co-working. It's a new type of business hotel, also suitable for long stays where people can live, work, relax, socialize while getting wired into the city.
And I was particularly inspired this morning by the AI chat and realizing that I'm kind of behind on the ChatGPT spectrum, decided to really get stuck in today, and I downloaded, this is no joke, downloaded ChatGPT right after the session and decided to type in what's the best first question to ask a panel of hotel experts on how to grow revenue beyond rooms. And I was pleasantly surprised by the answer. So guys, what are the most effective ancillary revenue streams that hotels can develop and leverage to enhance overall profitability? And what strategies have you found most successful in implementing these? Pretty strong. Don't need me anymore. I'm the first job to go, right? Go ahead, Jens. Yeah.
So I think I'm gonna do what we all should be doing here, which is strategically work with the AI and not just take its command. So I think one of the things that I would love for us to focus on in this session is ancillary spend, not as a siloed type of revenue, but how does it fit into the larger picture? Because I think that's one of the key things that we will be talking about. I think all of us are interested in. If we simply had different revenue streams, we would effectively be running 2 or 3 different businesses within the same real estate roof. We would have 3 or 4 different revenue teams, and we wouldn't need to be sitting here talking about how they combine. But I think the key question is, how do they correlate? And I think that's the big opportunity, is working out how can we make them correlate. We can do that by two ways effectively. Either we can look at where people stay. We can look at where people stay. We can look at who they are, or we can look at what they do, whether that's F&B or some other stream. But we have to connect them, and we'll talk more about that. But that's where I would start.
Absolutely. And Hans, from a property perspective, when you look at your P&L, do you see breakdowns of different types of revenue, or is it just room revenue, food and beverage, other?
No, and also to point out, Stephen shared the question with me, so I asked ChatGPT. But the answer was not that brilliant, I must say. No, definitely, I mean, traditionally we look to rooms, F&B, minor operating departments and these kind of systems, but we start to now dive deeper into the metrics. And that's a kind of a learning path, because the hospitality is not very good at providing those kind of figures. But in any case, what we've learned is that, and it's also pretty logical, there's quite a lot of unused capacity in the space that we have on a daily basis. So I still know hotels on great locations with breakfast restaurants where after breakfast basically the space is empty during the day. We also see that with meeting and event space, and even of course with rooms, because rooms are also not used 24/7. So the entire idea, what we had when we started with Zoku, is to create kind of hybrid spaces. And I think an interesting example is our room product, because in a normal hotel room, the bed is the most dominant piece of furniture. We've hidden the bed, and the kitchen table is paramount. That gives us a kind of an opportunity to use the same space as a hotel room, as a service department. But during COVID, we learned as a private office, at a meeting room, and even we used it as event spaces, where we, during COVID, created the biggest collection of Michelin-star restaurants where people needed to cook a 4-course Michelin-star dinner into their lofts. So while everything in Amsterdam was basically closed, we were at full capacity. What we've, for example, been experimenting with so we currently have Amsterdam, Copenhagen, Vienna, and Paris. And in Vienna, we're experimenting with the fact that during busy times in the conference center, we sell part of the rooms as meeting spaces. While those generate on those days 400 euros per day during daytime, while a room sells as a much lower price. And even we have the model now here that we can sell a room during the nighttime for sleeping, and if a person would leave at 7 o'clock, we could sell the room another time. That's also with regards to the social spaces. So I think what is interesting, if hoteliers start to look on how can I stack different business models on the same square meter during different moments of the day and the week. And I think Eric from Strawberry was referring this morning, how can we make buildings more relevant for more people during more moments? At some point you paid your rent. At some point you paid your energy expenses. So all the additional revenue that you're going to create has a relatively high profit conversion. And although the technology is not completely there, I think Muse is quite far with working on this. We feel there's a huge potential of just creating more revenue, and we see now the metrics actually proving that.
And you know, we've talked a bit in the past about metrics, and we heard some of this earlier today about revenue per available meter, or even GOP per available meter, and things like that. Do you guys look at metrics like that in your day-to-day kind of analysis of what you're looking at in terms of returns? Yeah, we start to actually include them in our monthly reporting. So not only ADR and occupancy and RevPAR, but also how much money can we create with a square meter. And I think if on a Friday you would arrive at Zoku here in Amsterdam, and I just would like to invite you to go there, between 7 and 9 people are having breakfast. Then at 9 o'clock the members come in, because we have a co-working concept stacked on the same space. There are many operators, they experiment with co-working, but they put it in a separate part of the building. We just include it in our square meters. That means during the day it's busy with co-working members, and that generates a substantial amount of money already during the year, but it creates also life in your social spaces. And then in the evening we got live music and 200 neighbors show up. It's pretty interesting that, for example, more than 50% of our F&B revenue is from outside guests, from neighbors coming by. And that is pretty unique in the hotel industry, I think. Yeah, and as a real estate investor, revenue per available meter makes a lot of sense to me and speaks my language. Now, I know, Michael, when we spoke in the past, you were thinking more about who your most valuable guest is, a Haag or something like that. How do you think of that, and how are you able to leverage a revenue management system to figure that out?
Yeah, when we think of holistic revenue management, there are really three components. There's time, so how do you fill each day into the future, the space, and the traveler. So each of those elements has a revenue component attached to it, but the complexity comes is how do you take all of the information relating to your space, to your guests, and to the times that you're trying to fill those spaces with those guests and create the right equation to provide the most revenue for your space. And one measure is to just look at the guest, to identify the guests that are going to spend more than just the room, actually look at how much of their wallet they're going to share. And that obviously requires you to get much more information on those guests and be able to profile your guests much more finitely or granularly than we do at the moment. At the moment, we use pretty coarse segmentations to identify our guests. But if we get down to a level where we're starting to, ideally one-to-one, but if not one-to-one, then closer to that, so they can really understand which types of guests are going to spend more at property and attract more of those guests so that they're not just sleeping in your rooms, but they're eating in your restaurants, they're using the other facilities. So it's revenue per available guest or revenue per square meter. Ideally, I think it's a combination of both of those.
Great. And Jens, in terms of how, we have two kind of revenue management systems, platforms, whatever you guys want to call yourself these days. Mm-hmm. How do you see yourself as adding to that and the role of data in particular and seeing how that all fits together?
Yeah, I think there's two components to what we do. One is being extremely data-driven, which meant that we had to build up a whole data stack. And then it's really being the platform that's leading the charge in terms of applying AI to that data. So having a very heavy emphasis on that, which is expressed in our investment in science. But I think starting with the data piece that you just alluded to, I think we have to create these new metrics effectively that bring together the guest, the space, and the time or the product. And what you're talking about, Hans, is really important and really valuable. I think we have this arbitrary distinction between ancillary and space. But really, we saw a chart up here by Richard earlier of 24 hours in a day. Where do I spend my time? And actually, is the meeting room during part of the day, is that ancillary spend, or is that just space? And we're doing some really interesting work there with hybrid. So out of the top 20 hybrid companies, 50% or so are on our platform. And we have, TSH is one of our customers. We had a dashboard live for them 2 years ago showing them gross operating profit per square meter and moving that forward as a metric. And that's on top of a partnership with, shameless plug from use here, but the services concept that they have where they're also able to sell multiple products on top of the same physical real estate. So then you really have to have a gross operating profit per square foot or square meter understanding.
Yeah, I think it's becoming clear from everybody that you really need a 4-dimensional view of your real estate, right? You need to take it in 3 dimensions, but then you need to add that time dimension as the 4th, and it's finding metrics and ways to measure that's key. I wonder, Michael, have you worked with anybody that has had particularly good data on this that you've then been able to kind of go through and again, the role of the hotel and the property in terms of getting data that's clean, that's well organized? What does that look like to you, or good examples of that?
Truthfully, it's a struggle. We've got the rooms element pretty well nailed down. I think working with property management systems to get good, clean reservation data is now table stakes. I think we all accept that the reservation data and the other data sets that we use to forecast demand is pretty good. But when it comes to other data sets, like the guest information, the information on the guests, what they spend, where they spend it, what their likes, their preferences are, the integration, I think marketing and revenue management still operate in silos, not just departmentally, but technically as well. So that is a struggle. And then Jens mentioned profit. Just understanding the costs of services in a hotel is a real struggle as well. Obviously, we understand distribution costs pretty well, but what about cleaning costs and other costs in the hotel? Because that's another dimension that you need to consider. Ultimately, we want to get to not revenue, but profitability per square meter or per available guest. And that requires much better information around the cost so that the revenue management system can decide whether I take one guest staying for 7 nights that has the room clean for two days, and that person is going to eat at the restaurants and spend a lot of money on property, versus having 3 people stay for two-night lengths of stays, so similar length of stay, but they're only staying for the room, understanding which is the most profitable guest for your hotel. So the longer length of stay guest might add less revenue at the top line, but the profitability would be better than the 3 guests that are not spending any money at the hotel. So it's a tricky combination of elements that you have to consider to come up with the right answer. Technically, I think the technology is there to analyze and come up with the right results, but then the data is the oxygen, and without good, clean oxygen, the results will be polluted.
I can only confirm that, because we do at Zoku, we do hotel stays, so 1 to 4 nights, short stay 5 to 28 nights, and long stay 29 nights and long. And they all have different cost structures. I mean, hotel stay definitely has the highest OTA cost compared to long stay, for example, which is, so I think if the system can actually help us with making better decisions on a daily basis with what is the most profitable guest, that's interesting. I think what we also learned is that you have different segments. So for example, just to give you an example, we do relocations, where people have the first month at Zoku. We do also company offsites and team retreats. So last year in February, we rented out a full hotel for a full month to one single software company, Mentimeter from Stockholm, who basically allowed their people to work from anywhere for a full month, which was interesting. The interesting thing is that it's not only to increase the value, you also can focus on creating a higher perceived value. That means that for those different segments, for relocations, we have actually developed a different product than from team offsites and company retreats, because those different people have completely different needs. And if you then tailor-made your offering, and whether it's micro-segmenting in your marketing, but also making sure that from an operational point of view, you create a best ever guest experience for that specific target audience, your perceived value will grow more, and that also helps to boost revenue and profit.
Jens, yeah.
Well, I think on the data point that you make, Michael, which I think is accurate, we often come back to connectivity and data in the industry. But I think, and those are challenges. We have worked very hard over the last 8 years to have excellent connectivity and real-time connectivity with PMSs. But there's other forms of data that we can't have that connectivity with, whether it's point of sale or F&B or other revenue streams. But I think it's to give everybody in the room one of hopefully more takeaways. We shouldn't let excellent stand in the way of the good, and I think that's where we can come up with approximations. Even ballpark numbers are helpful, and what's historically happened is that we take data out of whatever data store we have, somebody does a little Excel thing, and that's how we understand, for example, additional spend based on whether it's segment or room category or something similar. We've taken an approach where the only way we're going to get rid of Excel and make it more scalable is to enable you to put assumptions into your data platform. So we call this data enrichment. It was released 1 or 2 years ago. And you can effectively then put into your full data warehouse and BI solution, you can enter approximations for distribution cost on a rate code level. You can enter approximations for margin on a product level. You can enter square meters. And then all of a sudden, anybody in your organization can build stuff which is enabled by those approximations.
And one of the ways that we've seen the growth of RMSs and especially over the last probably 10 years or so, really getting into a fairly automated process on the revenue side, but we haven't seen something similar on cost, right? And so I know this is a revenue discussion, but at the end of the day, profitability is key. And what do we see in terms of benchmarking capability? How do we see kind of a more open data universe on the cost sides of things, which then educate the revenue side of things? Because I think, as you say, Michael, right? You need to know which guest is going to not just spend the most, but also be the most profitable for you. Hans, do you have data sources that you guys use for cost benchmarking and things like that, or is it just your other properties? How do you think about that?
Well, the availability of data for cost bench marking is far more limited than on the revenue side. I mean, we share, of course, the revenue, the occupancies, the ADRs. We know exactly what our RGI is, but from the cost basis, it's far more complicated. Also because not everybody is booking everything on the same line. Then, of course, the companies are completely different cost structures. How much transfer, how much centralized service costs do you include, and these kind of things. That's a little bit fuzzy. So it's pretty difficult to compare, I think, with your peer group. Of course, we compare GOP levels and these kind of things, but still, even that's every now and then it's limited. However, among the different properties we have, we can create quite a lot of comparisons, and we are getting much better in that. And we're making a monthly analysis of who's best in class and what we can learn from each other. And I think that's the big benefit that we have now with 4 properties open in 4 European capitals.
And in terms of the future of revenue management and kind of going beyond rooms, what do you see, Jens, in terms of what's coming next beyond AI, beyond all the things we've been talking about this morning?
Beyond AI, well, I think staying within the realm of the next decade, I think that's going to be the big story. I think it's important to point out, some of the speakers already pointed this out. This is no longer something that is going to happen, it's happening, and this is a story which we need to remind ourselves of. We have self-driving taxis, robo-taxis are live in 3 US cities. This is spreading like wildfire. So what we have today, we already have, for example, we've run live experiments with pricing and restriction optimization on net RevPAR level, and once or twice even experimented with profit level. So that's all live, and our platform is set up for that. But I think in order for us to do that in a smart way, we have to horizontally extend revenue, the revenue concept, to total revenue. And then we think of it as a matrix, effectively. We have to extend it to encompass all relevant, connected revenue sources. Because if something is disconnected, if we have a restaurant which has its own independent demand function, then it doesn't help us to connect it. And then we have to vertically integrate them so that we understand distribution costs, margins, etc., all the way up and down. But I think we are in a place where that work is being done, and we have that in place in many places. The really hard challenge is, if you think, and people don't understand really how hard revenue management is today, if you think that's hard, imagine doing these combinatorial optimizations where we are, for hybrids, having to optimize what's the optimal price for 3 different product categories, including ancillary spend, including operating margins, and now calculating in real time displacement between them. Should this product, beds, be allowed to eat from this room category? Should meeting rooms be allowed to eat another inventory? Those are very, very hard problems, which require a ton of computational power.
Yeah, I'm smiling because if someone is resistant to adopting automated decision-making now, I think when we move into this realm, it just becomes inconceivable that any human would be able to compete with the power of a machine in crunching all of those dimensions and coming up with a sensible answer saying this is the optimal result. So, and it's accelerating. I think that future is not too far away. I think as we get access to better data, and the downstream distribution systems start understanding not just a revenue restriction, but also a profitability restriction, because that's also one of the challenges we have. How do you interpret a profitability number rather than a revenue number on a distribution platform? But once we solve those challenges, the capability or the possibilities that AI then opens up in terms of decision making becomes very, very powerful.
And I guess just before we get into the Slido questions, pitting 2 revenue management platforms against each other, how are you differentiating yourself today, and how do you think that looks in 10 years' time in terms of where you'll be able to distinguish ideas from FLYR?
Who goes first?
You first.
Oh, it's a tough question. I think we focus. I think we understand the problems. I think it's not. We know what the challenges are, and we need to solve for those challenges. And as long as we remain focused on delivering results that overcome these challenges and automate a lot of the repetitive, redundant tasks, but provide superior results, then we will be relevant and will remain relevant. So we have to keep, anticipate what our customers are looking for and ensuring that we invest appropriately to solve those problems.
And I guess I would say that we have a huge amount of respect for ideas who effectively built the industry of revenue management. Started in 1989, and much of what we have today in revenue management is a consequence of the innovation that came out of those decades. We would probably talk about the difference between decision support, which is effectively how do I become more efficient with the process I'm running today, versus decision intelligence. And I think that's a story that we talk a lot about, where we think the revenue platforms that we have today, most of them have been built to help a human be more effective, but the human is the judge of, is this price right or not? And if it's wrong, I override, or I go back to the RMS and I complain and they tweak it and I get the answer I want. But it's all about having control over the platform and getting explainability. So how do I explain this to my GM, etc.? But I think in all areas where AI is disrupting, we are sacrificing some amount of control and explainability for strategic influence and greater performance. So that's where we're focused on, the decision intelligence piece. And that's where all of our innovation is. With our data scientists, they're effectively told, here are the metrics. Your only goal is to improve forecast accuracy and profit or revenue outcomes, even if the customer says, I was expecting a different decision at this point in time.
I like the quote from the keynote speaker this morning about saying that AI might not replace your job, but your job will be replaced by someone using AI. And I think that's very, very real and something that I think we probably both keep in the back of our minds when we're developing our solutions.
Great. Well, we'll surrender control over to the audience for questions on Slido. Feel free to keep adding these as we go. We'll try to get to as many of these as possible. So the first one from Pablo, which one do you foresee moving faster into dynamic pricing and real revenue management? F&B, spa, events, probably others as well. But of those three, I guess, which do you see kind of moving in faster, John?
Well, I think I would say that they all already have dynamic pricing. So I think for me, the question is not so much, do they have dynamic pricing independently, but when do we have that holistic dynamic pricing or optimization? And that's really the question. Do I, F&B, we have some interesting startups that are doing work on how do I place my covers, how do I place my rooms, how do I price my menus? But the really interesting question, which we work with TSH on, is where do I think that somebody may also is in a meeting space at the moment, and we can broaden the journey with them. They can become a customer that spends 18 hours a day with us, not just 2 for lunch. Should I drop my price for lunch in order to have more of their business elsewhere? And that's the stuff that's gonna be happening. But I think we have to build the basics. We have to remember that in this industry, I don't know if all of you already have tech to provide these real-time decisions for you, but we're still not there as an industry. So the first hurdle is to get tech in. The next hurdle is to sacrifice some control and move towards an AI-driven paradigm, and only then are we able to do some of this stuff, because it's just too complicated for a spreadsheet.
And I guess I hear you, but I guess coming back to your first comment that these are already dynamically priced. I'm looking over at Hans, thinking, do you dynamically price your events, or is it just a rate card? I mean,
it's a rate card.
Yeah.
But definitely, I see there's an opportunity. I think there are certain days which are structurally slower than other days. And other days we're always fully booked. So I think that could be interesting. We also don't play with our co-working memberships or a day pass, for example. Especially day pass. Co-working membership is you pay for a month, but day passes actually you could create variety with that. So I think there are quite a lot of options still that we can do. You see now the first co-working operators where you basically, if you want to rent co-working space on a Tuesday and a Thursday, you pay more than on a Friday where nobody wants to work. And the difference is quite big, but that means that if you're kind of a startup company with not a big budget, you just say, let's meet in the office on a Friday. Why not?
It's a matter of degrees, isn't it? I remember when I came into the industry, which was 2016, 2017, and I was asking prospects, are you practicing dynamic pricing? And they would say yes, and I would be excited, and I would say, okay, how do you do it? And some of them, this is Scandinavia at the time, they would say, well, we have a summer price and a winter price.
Yeah.
So it's a matter of degrees.
Another one for Hans. How does your operation manage the housekeeping team to enable flexible day use sale when you cannot predict when a guest will check out early?
Yeah, this is a kind of a model that, I mean, we're experimenting with model, and we're absolutely convinced that the model would work. But ideally, you would love to be able to sell a room by the hour. Because what I normally do, if checkout time is 7 o'clock and I leave my room at checkout time is 11 o'clock and I leave my room at 7 o'clock for breakfast, then at 11:15 I pick up my luggage. And there's no incentive for me to basically check out earlier. If that's going to happen, and then between 7 and 9 the room can be cleaned and somebody could use it as a meeting space, that could work. But the technology is pretty complex now. There are, I mean, Muse is definitely, what I said before, pretty forward-thinking with that, and we are getting there. But so far, it's a little bit complex, so we still do it with smaller experiments with Excel, but hopefully in the future we can do it differently.
So checking out of my Bob W today, there was some penalties. If I wanted a late checkout, I could pay for it. Fair enough.
Yeah.
But there was no incentive for me to leave at 7 a.m.
No.
Which, you know, is when I left. Is that a world of worth exploration?
Well, I mean, definitely. I mean, if you have an early meeting, if I stay and work there in the lobby until 11 o'clock and I keep the room occupied, if there's an incentive for me just to check out at 7 because I don't need the room anymore, but I'm just lazy, want to pick up my luggage at the last moment. I mean, it's basically trying to find as much capacity as you can and then try to sell that capacity. And of course, this is not a model where you can increase the utilization from 25 to 75%. But it's actually, in any case, what we see is it can be so profitable to add those extra revenue streams.
Yeah, I can see a world where if I check out by 8 a.m., I get a free coffee down at the bar. Seems like a win around.
Yeah.
So, this one for Jens. I guess beyond RMSs will be going from explicit revenue management to revenue strategy. Could you elaborate what you're thinking here? And don't you feel that strategy needs human intelligence? So I think particularly start with Jens on that one. Yeah.
Yeah. So I think management is effectively denotes a very tactical activity, and strategy denotes a higher level activity. And I think when we look at AI, we're looking at how can we automate away basically the simple repetitive tasks that require a high amount of computation. So we have calculators, for example, that's basically technology to help us not use pen and paper for multiplication. It's something that nobody really wants to be doing. But when it comes to the strategic element, the reason we're moving to revenue strategy is we need to be in a world where people are focused on new opportunities. They're focused on revenue leakages or profit leakages. They're focused on breaking down silos. And in order for us to enable, our revenue teams are so well placed to be doing this in most cases. And in some cases, there has to be some training and development and upskilling, but they're a perfect team to be doing that. So I think that's the opportunity. And in order to gain those opportunities, we have to give up coming in, and I've spoken to some people who come in on a Monday and look through a list of all the reservations with a yellow marker and to try and find outliers. That's probably not, that's the world of revenue management, right? And then I go in and do all the pricing. The world of revenue strategy is I have a commercial meetings with all the different stakeholders, and I develop a joint strategy based on joint KPIs that I have produced. And we talk about how we should balance our work. Where should marketing be focused? Where do we need more demand? Where is sales stepping on other demands? You know, where are they actually taking profitability away from the business? So I think that it's a huge move.
Yep.
And it seems obvious, but it's something that we should be talking a lot more about. What does that transition mean? And it definitely means that people are involved and human intelligence is involved, but it's deployed as impactfully as possible.
I think just to add to that is, obviously we're very aware of the resource shortages in the industry as well. So if we try and just continue adding more people to these jobs that Jens mentioned these repetitive, redundant jobs. A, they're not very interesting jobs, and people won't stick around. But B, even if we can find those people to do those jobs, they're not going to. We won't. So revenue strategy allows or creates interesting jobs for people that allows them to be stimulated, and the AI comes in the background and just automates that strategy that they've laid out. So it really allows for scalability in the hotel operation as well, and creates interesting and exciting jobs for the industry as well.
Thanks. And this last one will go towards you, Hans, and it's kind of taking off of a bit of one of the ones from Slido. But in terms of your marketing over the next few months, thinking about revenue beyond rooms and some of the ancillary spaces that you do and the four-dimensionality we talked about before, how do you then approach your marketing budget and your focus areas to drive additional time spent in a bedroom or a meeting or what have you? How does marketing fit into all of that?
Well, we basically will focus pretty much on team retreats and company offsites. So we see now, and I think Muse is a great example of that, this company works almost fully remote. Of course, they have some offices, but you see that the teams need to come together, and that's with many companies at the moment. The interesting part of those companies, they come for a team offsite or company retreats, they also need to work. I mean, previously, team offsites were very much social. Now there's a kind of a combination. We are together for 5 days, we work together. And that's a great way of using our spaces, because they can work in our lofts during the day, they can have smaller meetings over there, they can also go in the busy social space, they can use meeting spaces. So the most interesting target audience for us are basically the people who are used to using all those different facilities in the same venue, because that's basically maximizing the revenue for the square meters, but also per guest. And I think that will be a key focus of us. Also because the market of team offsites and company retreats is faster growing. It's 17% this year compared to, lower rates for normal meeting events.
That's great. Well, I hope everybody enjoyed the session, learned some about strategies on driving revenue beyond bedrooms and the roles that RMSs play in that and will play in the future with AI and everything else coming its way. Thank you very much to our panelists, Jens, Michael, and Hans. Thank you.
Just to give everyone a time check, and thank you, Stephen, so much for that session. We're going to start the next session in about 5 minutes, just to allow everyone to do room changes. Some of the rooms are really crowded and people need some time to move around, so we'll be about 5 minutes. Thank you.